the use cases for XRP, Solana, Ethereum, obviously Bitcoin. Another one of those coin words that people hear in the space is stablecoin. Talk about that a little bit and the use cases for that.
So I have a couple slides talking about stablecoins later, but just to get into it right now for a basic definition, if we were to build out any digital economy right now at scale, the very first thing we need to do is decide how we pay and how we get paid. If we don't have those two things figured out, we can't build out a whole economy. And a word that comes up a lot in documents from the Bank of International Settlements to the UK government is this term singleness. $1 has to equal $1, whether it's on the blockchain space, whether it's a cash deposit, whether it's physical cash. We have to be able to trust that our dollar is a dollar no matter where it's at. And we need regulations behind it. And that's what the Genius Act does. The Genius Act regulates stablecoins. And what people don't realize a lot about stablecoins is that they're backed by 1-to-1 to the dollar once the Genius Act passes, because it's a national security risk as well to not have stablecoin legislation, because over 90% of stablecoins are denominated in US dollars. They're not only backed 1-to-1 by a dollar, but they're also backed by short-term treasury bills. And something that I found interesting was a document that I read, let's say 3-4 months ago. It spoke about how stablecoins can help with the national debt. Because if overnight we're creating trillions of dollars going in to the U.S. short-term treasury bills and creating the buy of our debt overnight. Citibank actually documented that by 2030, they're predicting that stablecoins will be the largest holder of U.S. national debt. That's very, very telling. And it's going to create a world where governments and banks and institutions aren't the only ones holding our debt. Because if someone on here watching is from Argentina or from somewhere where they have high inflation, you would rather save in dollars. You would rather not save in your currency, because you can wake up one morning and your dollar be worthless. But if you can just download a smartphone app and transfer your money into stablecoins, now you're holding your value of your dollar over the long period of time. And not to mention, if we pass this stablecoin legislation, which I truly believe it will put a downward pressure on yields, allowing the U.S. to borrow at cheaper rates. Stablecoins have a plethora of different use cases. I have a slide on here to talk about how stablecoins can help with businesses and how it can bring increased market cap for companies. It has a tremendous amount of use cases, and people are only focusing on one or two. But as I always say, follow institutional documentation, because they actively tell us the real use cases regarding stablecoins.
All right, so let's keep going.
So something that I was looking for a while is what percentage are institutions actually putting into stablecoins? Because we know that the bond market is essentially dead. You guys talk about the market monies all the time. The bond market is becoming almost uninvestable at this point. And what's going to replace it? Well, institutions actually tell us the allocations that they're putting into crypto. This document goes on to say in 2025, 59% of respondents plan to allocate over 5% of the assets under management to cryptocurrencies. This is from the same survey from previous that interviewed 352 institutional investors, which every single one manages over $1 billion. So you can do the math yourself on how much money each one will be allocating. This blue box on the right side of the screen, that's the 59% of people who are allocating over 5%, but the lowest end is 5%. Some institutions are actually allocating over 30% to cryptocurrencies. Now, I'm not telling you guys to allocate 30% or 20% or even 5%, but if institutions are actively documenting that they are allocating over 5% to crypto, I think it deserves a place in our portfolio. Now, BlackRock came out with a document sometime at the beginning of this year, and they stated that they actually recommend that people invest 1 to 3% in crypto.
That was our number. That's interesting. That was our number as well.
Mm-hmm. So, whether you have 30% in there or 1% in there, I think some allocation to crypto would be intelligent. And then that goes to the point again where there's 40 million tokens, and what tokens do you actually invest into? The safest one is Bitcoin. People that are close to me know that I recommend Bitcoin as a 401k. Every single time you get paid, put the same amount you put into your 401k right into Bitcoin if you don't want to put any more than that. And then do that on a nonstop automatic payment. It's going to outperform your 401k over the course of history. Bitcoin is one of the top performing assets of all time. So to be able to have an allocation to that, some of the other important altcoins, I think is very, very important.
So if we look at the top 10, right? If we go to Coin Market Cap and we look at the top 10, there's some, obviously, I mean, billion-dollar crypto companies, right? Are we investing in anything outside of the top 5, even if there's institutional investing that we see in the top 10, or are we sticking to Bitcoin? Like, what's the suggestion there?
My suggestion there, and we'll get more into the weeds of what this is later, but there's actually a business standard called ISO 20022 that everything we deal with in life, our standards are regulated, and it goes over most people's heads. Like, it's the standards are the reason why that I can have a Gmail account and you can have a Hotmail account, and our emails can go through to each other. Standards are the reason why that my Verizon phone carrier can communicate with your AT&T phone carrier. Standards are the reason why you can take money out from an ATM and not be at the physical bank location. There's actually business standards. There's tokens that are ISO 20022 compliant that I would suggest after the top 4. Like, get your top 4 in. And I follow what you guys say a lot. And I think it's very, very intelligent to have 4 to 8 top picks. I think once you get past 8, you're kind of stretching a little bit and not being hyper-focused and not getting the true amount of gains that you deserve as an investor. But I think the safest picks, Bitcoin, Solana, Ethereum, XRP. After that, some of the ISO 20022 compliant tokens, such as XLM, HBAR, XEC, Algo, Quant, IOTA, and Cardano, as well as Chainlink. I've seen Chainlink a lot in documentation from Swift. Chainlink, I like to say it like this, is essentially married with Swift. The one-on-one, they go hand in hand. And Chainlink, what Chainlink specifically does, because blockchains aren't inherently interoperable. The problem with our financial system today is that our financial institutions don't communicate to each other. My TD Bank can't communicate to your Citibank account and can't communicate to your Chase Bank account. And that's a problem. That causes us to have no-show and roadshow accounts, causes us to have money that's sitting dormant. And a lot of capital is going to be released into the world. And what is a no-show account? What is a roadshow account? It's essentially me parking money at another bank and saying, okay, when I pay you, I know it's going to take 5 to 7 days. I know there's going to be high fees, and the payment may or may not get there. So here's the money in advance. And once the transaction goes through, just put it back into account in simple terms. But roughly there's $21 trillion locked up in capital like that. And Chainlink specifically handles the interoperability from blockchain to blockchain, because the Bitcoin blockchain doesn't talk to the Ethereum blockchain. But we also need interoperability between traditional financial institutions. And that's what ISO 20022 does. And it's just business standards that institutions have to follow.
Gotcha.
So when people ask me why crypto, why blockchain, why do I need to be an investor right now? This is a document from Citibank. They go on to say 2025 has the potential to be blockchain's ChatGPT moment for adoption in the financial and public sector, driven by regulatory change. And there's a couple key words in this that I don't want to overlook whatsoever. Citibank quite literally said 2025 has the potential to be blockchain's ChatGPT moment. We all know what ChatGPT did once it hit the world. And for them to compare blockchain to that kind of took me off guard, even after all the documentation that I've read. But that's not the most important thing to me. The most important thing was driven by regulatory change. They're basically telling us the one thing that's stopping blockchain from having a ChatGPT moment is regulations. As we know, regulations are on their way. In crypto, a lot of people get stuck in this bubble and think that crypto is just in the United States. Crypto is global. There's already regulations in the European Union, Japan, Hong Kong, Russia is on the way, Canada, you name it. If you go down every single country in the world, they're regulating stablecoins. They're regulating digital assets. But the largest mover for the entire world economy is the United States. And once the United States allows the Genius Act, the Stablecoin Act, or Stablecoin bill to be passed, that's unlocking trillions of dollars into our economy. Because remember what I said earlier, the first thing of what we need when you build out any digital economy, you have to figure out how to pay and how to get paid. And then it's off to the races after that. But to speak more about stablecoins, this document is from the Bretton Woods Committee in February 2025. They go on to say unlocking stablecoins, exploring opportunities and also risks. The global dialogue around tokenization, the process of representing traditional financial assets on blockchains, is rapidly advancing due to the potential to reduce costs, speed settlement, enhance transparency, and increase efficiency through automation and programmability. They go on to say these potential benefits and why many, including the World Economic Forum, Citigroup, Boston Consulting Group, and others, estimate that trillions of dollars of financial transactions could be tokenized in the next decade. Larry Fink wasn't the only one to tell us that tokenization, everything will be tokenized. Every single bank, government institution around the world is saying the same exact thing. They go on to say, stablecoins are a tokenized form of currency that aims to perform the functions of traditional fiat currency on the blockchain. Like I told you guys earlier, $1 has to represent $1, whether it's a cash deposit, cash, or a stablecoin. And that's what this Genius Act does for us.